Well, good morning, everyone. Welcome to our Wednesday morning trading room. Hang on here a second. We'll get the screen share going on. Okay. So, yesterday, a little bit of a wild day going into the close, huh? About an hour before the market settled, big rally higher. I thought for sure the whole day was going to stay in the sideways trading range, but that didn't happen. Hey, way to go, Mark. Mark's starting the day early here. He says, I picked up a trade at 4:37 my time. Right here, a nice little trend change signal on the Falcon. And yes, indeed, that did make a very strong move lower. The overnight trend does seem to, well, let's take a look here at the Eagle. It did waffle a little bit, didn't it? Big rally up, big move down. Very often when that happens, the market will try to reverse on itself if there's some sort of overnight trend. It looks like this may have been your opening eagle signal right here, in which case you've already capitalized on that first eagle signal of the day. We're bouncing around here a little bit. I'm trying to get my laptop loaded up for next week so that I can keep the trading room open. I may only be able to have the Raptor on, but we'll see. We'll see what I can do. If I can somehow drag another monitor with me. It's the screen sharing software that takes some room as well, and the recording software. Phil, I would be happy to send you the Hawk cheat sheet. You're going to have to email me, though. And I'll put my email here in the window. And if you don't mind just shooting me an email to that number. Mark says those early pre-market trades have been my bread and butter as of late, trying to get in before the slaughter of the volatility happens after the U.S. Open. You know, it's funny, it wasn't that long ago the pre-market was non-existent. But now, the way the markets are, you can pretty much trade 24/7. Doesn't matter where in the world you are. There's probably an opportunity brewing somewhere, sometime. Okay, we're still getting some additional signals here now, and I'm very tempted to try to throw in a sell order, but what time is it? Oh, we're only 5 minutes into the day. Probably shouldn't get too crazy just yet. few more yellow bars cropping up here on the hawk now. A nice little late filter entry here on the falcon. That should have some follow through to it. That's odd. Phil says, I tried to access the Indicator Warehouse website and my virus protection won't let me get into anything on the site. You should be able to whitelist Indicator Warehouse on your antivirus, but at any rate, please just pop me an email and I will be sure to send you the Hawk cheat sheet. Right now, the short-term trend definitely lower. I'm not sure. What's holding me up is the big rally from yesterday's close. This. The buyers are likely not going to walk away from that. So I'm thinking could be some buying coming here somewhere. And right now we are sitting on the primary support line. Hey, way to go, Mark. Mark says good follow through on that late filter entry 2 for 2. Yeah, I was wondering if you may have hopped in on that one. Here's a nice late filter entry signal. Here's even a better late filter entry signal. A lot of times you like to see that trend line go really nice and flat. The trend line, however, never changes color. That's key. The filter goes out of sync, comes back into sync, and that produces your late filter entry signal. Very, very reliable signal on the Falcon. I'm doing my best to be patient. And like I said, it's still very early. We're barely 10 minutes in. But like everybody, I'm thinking, what if this market bolts without me? What then? There's no denying the current strength of the sellers. The Raptor now with an early reversal signal, early number 2 signal. The Hawk was a very pretty 4-arrow consolidation. The Raptor, or pardon me, Falcon also getting a little bit more bullish. This 4-arrow consolidation has a nice little bear flag shape to it. which is always inviting. We are sitting on the primary support zone, and that seems to be holding the market for the moment. I wouldn't mind a hard edge bounce signal. I'm even halfway entertaining the number 2 signal, although, given the strength of the trend. Oh, here's another number 2 signal. It's kind of loosening up the seller's grip a little. I don't know if that's quite close enough for me to consider it a hard edge bounce yet. Oh, here comes yet another number 2 signal. So we're getting all these retests of the lows, finally a breakout above the high. Hard edge is the target for this. And now that we're into the hard edge, yeah, another soft edge buy signal, so yet another number 2. We do have a first micro-macro cross higher, as well as a trend change higher here on the Falcon. So things, like I said, starting to look a little bit more bullish. I can imagine the market moving back here to the hard edge. Overall, really, we still haven't moved all that far from 6,700, which wasn't it wasn't a number that came into play yesterday, but certainly the day before. Friday's session, we spent a whole lot of time around 6,700, at least to start. All right, so decent follow through on most of those signals as well. So far, the market playing nice. What I would expect after this rally is for the sellers to try to knock the market back down. And then we should have a better indication of which way things are actually leaning. So we're into the hard edge. On the Eagle, on the Raptor, whenever we encounter the hard edge, we do expect a reaction of some sort. And then depending on how the market follows through, we can either look to buy or sell. In fact, we may even be able to bracket a range. We know where the bottom end is right now. It's down here. We know where the top end is. It's up here. Well, I think it's up there. So I can throw in my order to short. Down here on my OCO. And come on, I wouldn't mind seeing you drift a little bit lower. Then I'll throw my order to buy up here. I'll get a stop strategy enabled. There we go. We'll go with the chandelier. It's right in the middle. This might be a little early still. Come on, give me a good retest there before you pop on through. These orders are live, of course, as soon as you put them on the chart. So if you feel they're a little bit tight, you know, you can certainly move them away a little. My concern, of course, is the 1 or 2 tick breakout above the swing high here. These matching or nearly matching swing highs. Okay, it looks like they're going to try to bring me in. And they did. So let's see if there's any follow through from this now. I'll move my break even a little bit higher. It's a little bit of a risky trade, actually. I'm going to hold my stops back here, just below that swing. Risky in the sense that the market hasn't really committed to the uptrend yet. Right? What we've seen so far is a very bearish market out of the open. So I'm getting a little bit aggressive here on the buy. Looking for the market to possibly retest the highs. And maybe I'll give them just a little extra. Okay, now we have a proper cloud crossover signal on the Raptor. So as far as the Raptor programming is concerned, the market definitely a little bit more bullish. Here now the bearish reaction. This is the part I was concerned about. You see, this is what I was trying to avoid. I was trying to avoid getting filled by a tick or two. And honestly, I thought about putting my stop just above 66.90, my entry stop. Nice job, Mark. Mark says, took the trend change signal on the Falcon to the upside 3 for 3 today into a 4-figure day. I may be done. Sure does help to trade with multiples. Ain't that the truth? That, folks, is the true secret to making money in trading. It's not trading more often, but rather having the ability to trade in multiples. Instead of just trading one contract at a time, you trade 2 or 3 or 4. The key is trading what you can afford, however. So those of you who are trading smaller accounts, don't fret. If you can only trade one contract, if that's all you can afford, then that's all you can afford. But if you limit the number of times you trade in a day, if you focus on your high probability signals, even just trading a couple times a day, it won't be long before your small account starts turning into a bigger account, and then you will have the ability to trade multiple contracts. So even if you have a very modest target of, say, $100 per day in profit, trading single contracts over the course of the year, that should gain you about $20,000 to your contract or to your account. If you have the ability to trade 2 contracts, well, then that would be $40,000. 3 contracts would be $60,000. 5 contracts would be $100,000 a year, and so on it goes. It's all in the math. Okay, so here a very bullish pushback now from the buyers. We're almost to the high of the morning, which was at 67.02. You can see stumbling a little bit here at 6,700. If the market allows me to ride out this swing, I might be able to head a little bit higher. Richard's asking, the ES is moving down. What do you make of it? Well, the ES, the E-mini S&P, is not really the leading market everybody thinks it is. In fact, I've mentioned this before, but oh my gosh, his name escapes me. There was a fellow who did a Marsh Jones. Oh my gosh, how could I not remember Marshall's name? He developed a trading methodology where he actually watched the mini Dow and the NASDAQ. He didn't even watch the charts. He just watched the time and sales, which I wouldn't recommend. It's enough to drive anybody crazy. But what he did is when he saw the NASDAQ and the mini Dow make a strong move in one direction or the other in sync, he knew he had a couple of seconds to get in an order on the E-mini S&P. That the E-mini actually lagged a little bit. And you have to remember, even though the stock indices have a tendency to move in sync for the most part, it's certainly not written in stone that they have to. They will catch up to each other. But like here is the Russell this morning. And you can see it's fairly subdued relative to the NASDAQ. And here is the E-mini. Just give me a moment. As my E-mini chart loads. So here's the E-mini now. And I suppose it has rallied a little bit, but certainly not as much or not as strongly as the NQ. Honestly, I try to keep each market on its own. I tried to trade the chart that's ahead of me. There are tendencies between markets, however. Like I used to watch the bond market, not so much to trade it, but rather to see how the bonds were in relation to the E-mini or the Dow. I wasn't really trading the NASDAQ at the time. Because I knew the bond market had an inverse relationship with the stock market. So if the stock market was going up, bonds should be going down, and vice versa. And if the bonds weren't moving opposite or not moving at all, then I had a pretty good idea that the move would be fairly short-lived, whatever the move happened to be. Again, you know, there's so much information out there, so many indicators, so many different ways to trade. You can drive yourself bonkers looking at too many things. One of the best traders I ever met trades off of one chart on his laptop. That's it. One chart. Okay, the sellers flexing their muscles here a little bit. A very late reaction to the hard edge, and now we're really getting the market in a bind again. So the possibility of another OCO order exists. We could short down here. We would buy up here. I'm favoring the sellers a little, but barely. If you wanted to, you could be a little bit more aggressive. You could tighten your range thusly. Maybe not quite that tight, maybe a little bit more like this. This now an early trend change signal to the short side. That's the early number one signal. Oh, I better get my stops enabled. Looks like they're going to try to fill me here short. And I'll hold my stops back, at least just for a little while. Oh, you stinkers. Are you going to make a run back through this resistance zone? I will not be happy. Come on. Give me that move down. Otherwise, I'm going to have to ditch and look at going the other way. Darn it, not what I wanted to see, a number one signal to the long side. This is the dilemma with bracket trades. The market brings you in and then swings you out. All right, so this now the second push on the number one signal. I don't normally reverse on a trade, but if I get tagged out on this, I will probably try to buy it. And Mark makes an interesting comment here that I'm going to share with you in a moment. Oh, you scoundrels. All right, well, like I said, I don't normally reverse on a signal, but this time I will. So I'm just going to hit in with a buy order. And I'm going to, we'll eliminate that for now. And unfortunately, I'm going to have to swing for the fences on this one. So I'll set my profit target way, way, way far away for now. Part of the reason I have to swing for the fences is to try to offset that loss I just incurred. All right, 6,700, big stumbling block. Actually, you know what I'm going to do? What I'll do is I'll just select one of my stop strategies when and if we can get above 6,700. Come on, push hard. All right, so while I'm waiting for that to unfold, and I'll just do a quick review of other signals that have produced in sync with this Raptor signal. You can see we have the first micro macro cross here on the Hawk, trend change signal on the Falcon. The Eagle actually giving us an earlier signal here with the hard edge bounce. Even though the trend line, the band was slightly out of sync. Oh my gosh, make another push at that 6,700 already. All right, while we're waiting on that, and I may hold my stop just a little bit deeper to start. This really is the proper stop down here. If you can't stand that, you can shoot yourself a little fib level and probably go down here below the 61.8% mark, which will put you pretty darn close to the crest in the hard edge, which is not a bad place to be. Wow, 6,700 really giving me the grief. Okay, Mark wrote, built my account up over the last year to get there, just used 3 high probability setups and a lot of discipline to get there. But looking back, it's paid off today with the ability to trade with more size. The D word, the discipline, is a real hurdle for a lot of people. A lot of people come into trading and they treat it like a video game and they think they can just shoot from the hip. No, it's a business like any other. If you were opening up a construction business or a shoe store or whatever, your widget factory, you would not make foolish expenditures. You would try not to make foolish expenditures. You would try not to make foolish decisions. And trading is the same. You're not always going to be right, as I so aptly demonstrate. But how you manage yourself and how you manage your trades, very important. Again, I'm a huge proponent of keeping a handwritten journal. You can keep electronic journals too. They make the bookkeeping a whole lot easier. But just the act of writing down your trades, and perhaps more importantly, the reason you took the trade, that will go a long ways to making you a better trader. All right, we're still stuck here at 6,700. If we get on the other side of 6,700, there could be some follow through here as we breach or attempt to breach the high of the morning. Hoping to ride out this swing. Come on, get up there, you stinkers. Wow. Right you are. Ryman FOMC statement on funds rate. I do believe that is out today. Yes, this afternoon. So the market could be a little bit strange until then. Okay, last chance. I'm going to start bringing my stops in here now. I'll bring it below the hard edge. Last chance for the buyers to do their thing. Otherwise, I'm going to take my toys and look elsewhere. That whole 6,700 region apparently really, really strong. All right, let's put that away. Well, not the best start to the day for me. Digging a little bit of a hole for myself. That's okay, the day ain't done. Yeah, like Phil says, speed trading after the FOMC. Ain't that the truth? The world comes unstuck. I'm still struggling with trend at this point. You can see here the hawk showing it very nicely. A lot of yellow bars, a lot of back and forth, no real commitment. Oh no! Don't you dare push higher now. That does not make me happy. A little bit too quick with my stop. Doggone it. Cost myself some money there for no reason. All right. Well, here now a first micro-macro cross signal to the upside. It's starting to look as though they may try to rally the market, the buyers. Shoot. Well, I need a something resembling a little bit more of a pullback at this point. Not really that keen on just hopping on board, although that might be what I need to do. Here now the trend change signal on the Falcon, just a basic trend change. You could use the second push entry opportunity. It's not really giving me a warm fuzzy feeling. See, how are we doing relative to the overnight highs? Oh, not there yet. 67.30 it looks like is where the market topped, and we're still 30 ticks shy of that. This move up bothers me a little bit too because it has a little bit of a bear flag type flavor to it. which makes me believe that maybe the sellers are going to try to come back again, and that's kind of what it's looking like now. So this is one of these situations where you're trying to determine the overall trend. And if you believe the overall trend to be down, and this rally that we've been watching here this morning is nothing more than a pullback phase in the larger trend, then that actually opens up the opportunity for a counter trend signal, a short-term counter trend signal, to become a long-term with trend signal. So we're seeing a little bit of a test of the extreme here now. We might get a number 2 signal form, and that would be what I was just talking about, kind of the larger trend, the downtrend signal. All right, so we've got the test of the extreme. No warning dot yet. I may just get ready with on the sell button here. And once again, the market really hunting for direction right now. Okay, we've got the warning dot. There's the sell signal. Well, that was a quick little move. And they're going to tag me at break even again. Got it. Just can't catch a break here this morning. All right, let's set it up again. This, by the way, now is going to be a hard edge bounce. So just goes back to the whole conflict thing that we're looking at. And if you think the market is more in an uptrend, well then of course ignore the sell signal. There was that sell spike that came through right there on the Geiger counter. See right there. All right, and now they're heading back. All right, why stop now, hey? I got tagged on a couple OCO orders. Let's throw another one into the mix. So we got ourselves another tight little trading range, another market. Very, very balanced. Oh, what time is it? Oh, we're almost an hour into the session. So, this is a lot of times when the market does do a reverse. Oh, let's get back in there. You can't stop me out like that. All right, so let's hold my stops up here just for the moment. I hope you're right, Phil. Phil says hit that longer term trend line and it should go short. I usually don't use the word should when I'm trading. The moment I come out and I say the market should do something, it usually does the exact opposite. Okay, took a little bit of slippage on that entry, so it just kind of goes to show the market kind of thin again. Here, the Geiger counter, there's that volume that came through the market on that quick little move lower. We're still hovering around 6,700. We really haven't moved, in spite of a couple of decent swings, we really haven't moved that far off of this mark, off of 6,700. We're just kind of skewered by that number. And prices will go a little higher and a little bit lower, but they don't really get away from there. Yeah, you can see they're just stuck. Everybody's stuck. Wow. If it wasn't for terrible follow through, I wouldn't have any. All right, here we go. Okay, so we've got a couple of follow-up signals on the Hawk. The Falcon, a little bit out of sync. That's a little disturbing. The Eagle hard into the hard edge. And normally there would be some sort of reaction there. Here with the Raptor, the clouds are trying to cross, so it's flip a coin. If we get down below these lows, okay, well, trade's at break even now. All right, so this is the first real stumbling block. If I can stay below here, below 66.90, there is room for the market to unwind. Hooray. And I may just go straight into parabolic mode. Okay, I'm going to hold my stops here just for a second because it looks like we're getting a little bit of a pullback building. Okay, there we go. Back into parabolic mode, trying to nurse this trade a little bit lower. All right. Hooray! Hooray! Finally got one. It's that kind of day. It's just kind of a back and forth kind of day. Haven't quite clawed myself back to break even yet, but I'm getting there, which is a little disappointing because that would have been a great trade otherwise. But that's trading, folks. You don't always pick all the winners, unfortunately. And these FOMC type days, they are difficult trading. It's just a rule. The market is not going to be all that cooperative when it's expecting a big report release. So we've got a little bit more structure to go off of now. Oh, are they going to continue lower? Did I get tagged a touch early? That's the thing with the parabolics, is you protect more open profit to be sure, but it also can stop you out prematurely. Yeah, Mark's right. Insane market. Okay. And now we're seeing a little bit of a recovery from the buyers. Back down to this prior swing low. Getting a little bit of a sideways trading range going on. It'll be interesting to see whether the buyers can sustain a rally now. Whereas the buyers were plotting higher, the sellers were pretty quick to move the market down, both in the open and just recently here, about an hour after the open. Ooh, Phil says we're in a long-term wedge. Let's take a look here at our long-term chart, and right you are, Phil. The market wedging up nicely. Market has a wedgie right there. Probably draw it something like that. Thing with all these breakout moves is the breakouts don't always take. I had a trading friend who always said, never trust a breakout. And it seems to be true, doesn't it? You know, like if you take a look at, I don't know, let's draw, like if we were following a trend line here, the market tries to break down. Nope, it didn't. It kept going higher. And you break this trend line. Okay, it went down for a few days, but nope, it kept going higher. And of course, the same is true of wedges and little sideways trading ranges as well. That keeps things interesting. I don't feel bad about the one loss I took this morning. The second loss I took, I wasn't really that happy with because I didn't manage my trade properly. Had I managed my stops a little better, that would not have been a losing trade. So that's always disappointing when you make an error like that. All right, we'll throw the Raptor back here on the shelf. So again, some early opportunities here where you can see we're really conflicted among our tools. The Hawk, bullish. Falcon, bullish. Eagle, technically bearish. And the Raptor, well, the Raptor's just flat out sideways. Okay. Things have gotten really quiet. like Elmer Fudd always used to say, it's very, very quiet. Oh, I know I'm dating myself with that reference. Yeah, David, very good observation. David's asking the Raptor filter, is that based on the longer term signal? The Raptor filter programming is actually the whole Eagle Trend Trader. Everything you see right here, all programmed into that filter. So yes, it tries to give you a longer term bias, and like the Eagle filter, it tries to show you when market momentum is shifting. So let me show you what I mean. Um, let's get it here where it's breaking up a little more. Generally, what you want to do is you want to pay attention to the sizing of the blocks. So here we have actually, allow me to dial it back a little bit more. Okay, so here we have a relatively big, I'm going to call it red. I know it's magenta, but a reddish box. Now all of a sudden we get a bigger blue uh, section showing up, and then that is in turn offset by an almost equal size reddish box, and then we get a bigger blue box. At this point, I would be thinking the market is getting a little bit more bullish, because you see how the momentum is starting to shift. We had a great big blue box, we get the magenta box, little blue box, little magenta box. Now we're getting a bigger blue box. Right now, I would be thinking, okay, the market momentum is shifting. I'm either going to look for a hard edge bounce, or maybe I'll just set up my just in case signal above the number one signal, just in case the market starts to rally. So that's kind of how you interpret the Raptor filter. In this case, however, we started coming back with another magenta box, and now all of a sudden you're looking at it and you're saying, well, whatever bullishness there was, it now seems to be offset by the sellers again. Now, don't take a micrometer and start measuring these things, right? If it looks like it's the same size, it's the same size. If it looks like it's bigger, it's bigger. So at this point, you could be looking at it and you could be saying, oh, it looks like the sellers are gaining control. So maybe I'll take a look at this number one signal that's building. It looks like the momentum is shifting now toward the sell side. And, you get a little bit of blue cropping in, that's okay. So long as the red still is outweighing the blue, you're probably in good shape. Here's a little bit of a larger blue block. That would not necessarily cause me too much concern, but if at this point I came back with more blue blocks, that would kind of tell me that maybe the sellers don't have the market in hand, and maybe it's time to take my stop and start bringing it in a little bit. I know I don't spend as much time pointing out the Raptor filter as I should, but that's really how it works. It gives you an indication of what the market momentum is doing, which way the market may be leaning. So what can we interpret from what's going on now? Well, there was a big buying attempt, very little follow through on that. Now the sellers, momentum wise, seem to have offset the buyers. Here come the buyers, and now here come the sellers. And you see how the selling block is pretty much the same size? That would tell me that the sellers have pretty much taken the momentum from the buyers. Here's a number one signal with a second push opportunity. So maybe I'll take a look at trying this signal, seeing how the momentum seems to be on the short side now. Thanks for asking that, David, because I I've used these tools for so long that sometimes I forget to point out some of these things. And I know there's a lot of new Raptor owners in the room. And so I really appreciate your questions. And, you know, you other owners or even DTS owners, you should not be shy about asking questions. I will do my best to answer them for you. Okay, so we're almost down here now to the break even. And, you know, we're here at the lows. I was going to say you could force the trade to break even. We've hit the break even trigger now. Come on. There we go. Hooray. Hit the profit target. All right. David's asking, how can you adjust the signal numbers and the background highlights? So you want to go to your indicator window and your Raptor version 2.0. I'll do the background highlights first. They're a little bit easier. The background highlights, you can adjust the opacity back here. So the lower the number, the more transparent they are. You can also adjust the colors right here. No, wait a minute. Yes, okay. No, that's not right. I may have to send you over to Ben. Signal label separation is right here, however. That's where you can adjust the distance between the price bar and the signal label. So mine is set at 2.1. I do believe that is the default. But the larger this number, the larger that value, the further the numbers will display. So feel free to experiment. You can see you can, I know the reason Ben set it at 2.1 is to let you know that you could go 2.5, 2.7, instead of just going from straight from 2 to 3 to 4 and so on. You can experiment with these colors here. Oh yes, of course, I'm sorry. These are the colors for the background highlights. My mistake. So if you click on those, you can select any color you like. And then you can adjust the opacity down here. So if the lines are too dark or too vague, you can adjust that value right there. And then when you have everything the way you like it, you just apply it and close it up and you should be good to go. By the way, that reminds me too, if for whatever reason you're having difficulty seeing what I'm doing on my charts, please let me know, because I can adjust most values to make it easier for you to see on your computer. All right, now it looks like the buyers are going to try to make a bit of a pushback. I think we're going to get this back and forth seesawing action, at least until the FOMC minutes are released this afternoon. And then like Phil said earlier, 20 tick slippage, fun, fun, fun. While we're on the subject of slippage, if you want to try to eliminate your slippage, or reduce it anyways, you can use your stop limit orders. Now, a stop limit allows you to preset how much slippage you will accept, and that is that value right there, stop limit ticks. In this case, by default, it is set at 1. If you're expecting a volatile market because of the report, you may want to dial it up to 2 or 3 ticks. In a market like the NASDAQ, that's only $15, so it's not a huge difference. But what that allows you to do is, and this isn't the signal, but I'm just showing you, it allows you to set up a trade, and you can see, oops, wrong button, this order separation now. So this is your stop price. This is where you would like to enter. And this is how much slippage you will accept. So this is telling Trade Manager you will accept an order anywhere from 66.89 quarter to 66.90. If the report comes out and the next order prints at 66.90 and a quarter, you will not get filled. The market will hop right over your order and you will not get filled. That's the downside of trying to avoid slippage. But it does allow you an extra degree of control, and you can adjust it. Oh, sorry, can't adjust it. You have to adjust it down here. So if you're sick and tired of being slipped all the time, that's one way you can make the market behave, by using the stop limit order. It's not a bad order, even as your default. Like I said, you can set it at a 1 tick slip. So the worst you'll ever get slipped is 1 tick. But conversely, don't be surprised if the market hops over your order, if things are really thin or moving really fast. But I know a lot of traders who they don't want to even be in a gapping market. So if the market's not behaving the way they want it to, they're just as happy to be out. Well, I'm not quite sure what to make of the market now. Like I said, it's still kind of waffling back and forth, getting perhaps slightly more bearish. I don't know. I've almost clawed myself back to break even. I hate to make things worse today by taking a stinker. I don't know. It's a tough call which way the market is wanting to go right now. Very neutral. And you can see here we're getting a lot of yellow bars on the hawk. The falcon also waffling back and forth. The eagle fairly constipated. great big trading range we're looking at today. Again, in spite of the big swings, you can see we haven't moved that far off of this 6,700 zone. I have a feeling we may find the market still content to hover in that area, which would mean the next move should be a move higher again. I don't think I'm going to bite. It's a little bit too close to the lunch hour, a little bit too close to the FOMC release. Yeah, so right now they're going to break for lunch. After that, everybody's going to be on hold for the FOMC. And I think you could just see the market continue to drift and grind for the remainder of the day and then explode and go berserk. All right, gang. I think we're going to button up shop here for the morning, and I will see you again Thursday morning. There will be no trading room on Friday, unfortunately, but I hope to have everything teed up and running for next week while I am out of town. All right, gang. See you tomorrow. Bye for now.